Hi everyone, welcome to Financial Markets by Dr. Supriya. In today's video, we will learn about gold ETFs. Gold ETF is an exchange traded fund. Now, first of all, before going into the details of gold ETF, let us first understand what are ETFs. What is an exchange traded fund? Exchange traded fund, to understand in the simplest language, is a combination of stocks and mutual funds. Like mutual funds have underlying security, a diversified portfolio. Similarly, ETFs also have an underlying security. It could be a commodity like gold, silver. It could be a bunch of stocks, which are the underlying securities of mutual funds. On the other hand, you buy and sell them through stock exchange. So it is a combination of stocks and mutual funds, which are traded on the stock market and function like a mutual fund. Before understanding the details, first let us understand the advantages, and if the advantages interest you, go further and watch the full video. In gold ETFs, purity of the gold is guaranteed and each unit is backed by physical gold of high purity of 1 gram. So suppose if you're purchasing 1 unit of gold ETF, you get 1 gram of gold. You pay a fair price as equivalent to the price of gold in the market, and you get that value of gold ETF in a digital form, like you're buying gold in a digital form. It provides transparent and real-time gold prices. It's a tax-efficient way to hold gold, as the income earned from them is treated as long-term capital gain. It is free from any kind of wealth tax, no STT is charged, no GST is charged. And so when at the time of selling, at times we have to sell our jewelry, maybe we need to exchange them or tone off jewelry. When we exchange them, a lot of impurities are deducted from the gold. In this case, you do not have to compromise on any single gram of gold, any single 0.001 gram of gold also. A fair value of price will be returned to you whenever you're going to sell your gold ETF units. Now, since this purchase is in a digital form, it is free from theft. So you do not require an extra locker for that. You just need to maintain a demat trading in a bank account to deal with the purchases and sales. ETFs are accepted as collateral for loan also. So in case you're looking out for loan at any point of time, you can use these as collateral securities. No entry or exit load is there, and it is highly liquid. So now, if the benefits interest you, let's look at what gold ETFs are. As I told you, ETF is a combination of stocks and mutual funds. You can sell and purchase them via stock exchange, and they function like a mutual fund wherein they have got an underlying security. Over here, the underlying security is gold. So a gold exchange traded fund is like owning a share of a treasure chest filled with gold. Instead of physically owning the gold, you buy a piece of virtual chest, making investing in gold as easy as buying a stock. So ETF is a replica of any commodity in digital form, and gold is a commodity and its digital replica is gold ETF. It tracks physical gold prices. Purity and price wise, gold ETFs represent 99.5% pure physical gold bars. Imagine when we are going at the shop, we do not get this much level of purity. When we go to buy real gold for investment purpose, we keep on collecting the jewelry 20 years down the line for our children, grandchildren. In that case, what is the real gold value that you're getting? Maybe you're not very sure of it. But here, if you purchase 1 gram of gold, it will be 99.5% as pure as gold. And when you're going to sell it, you will get back the same. Prices of gold ETFs are listed on the website of Bombay Stock Exchange and National Stock Exchange and can be bought or sold anytime through a stockbroker. Unlike gold jewelry, gold ETF can be bought and sold at the same price pan-India. There is no state-wise bifurcation in the gold prices. No extra making charge, no GST, no impurities to be paid off when you're selling them back. And they are highly liquid. one must always ensure that the investments are liquid, because we never know when we require money. So in case we are blocking our funds unnecessarily, and in case we require them and we are not able to use them, what's the use of those funds? So ensure that your funds are liquid. Liquidity means how easily your assets gets converted into cash. Now that you're convinced that you want to buy gold, how will you do that? You just need to have a demat account. If you already have that, then very nice. You are good to go for investing into the gold ETFs of your choice. Now you've purchased them and you want to sell them or redeem your money from them. So how can you do that? It's the same process, selling through the exchanges. Since one is investing in an ETF that is backed by a physical gold, ETFs are best used as tools to benefit from the price of gold rather than to get access to the physical gold. When you actually redeem gold ETF, you do not get physical gold but receive the cash equivalent to the quantity of gold which you hold in units. Who should invest? Anyone can invest. Whosoever is looking forward to buying gold should invest in gold ETFs. If you're looking forward for investments for your children, their marriage, 20 years down the line, 10 years down the line, 5 years down the line, this is the best way. You invest in the ETFs right now, then at the time of their wedding, at the time when you want to gift someone, purchase the recent current trend jewelry. So rather than going into a physical gold purchase, you can choose the options of ETFs which are highly desirable in times today. Now comes the risk factor. Since it is an investment and market related product, gold ETFs are subject to market risk. Whenever the prices of gold will go down, the ETF prices are going to go down. When the prices of gold are going to go up, the prices will go up. So it will keep on fluctuating as the gold prices will fluctuate. But in long run, if you see, since 2008, as far as I remember, the gold prices have gone up like anything from 10,000 rupees to 63,000 something right now. So imagine the appreciation in the long term period. So you should go in for it. Now that you know all about the gold ETFs, here's a hack to select the best. I will also tell you a list of mutual funds which are listed in the alphabetical order which we have in our Indian market. But before that, how will you choose the best mutual funds of you? Now, suppose you've got 10 ETFs in front of you, gold ETFs in front of you. How will you decide? The first criteria is choose the fund which has the higher corpus. Corpus means the greater money involvement. In technical language, we call it asset under management, which means that more and more people have invested into this share. It indicates high credibility also, and higher corpus also leads to lower expense ratio because the charges are divided among a large number of people. And higher corpus also suggests better acceptance and stability in the market. Second is expense ratio. Choose the funds which have lower expense ratio. So these two are interrelated. Higher the corpus amount, lower will be the expense ratio. So expense ratio are the charges which go from your pocket in managing the fund. And there is an upper limit of expense ratio on gold ETFs, that is 1%. Beyond 1%, you will not be charged. But within that 1% category, there can be difference between funds. So choose the lesser expense ratio. The third category is high liquidity is better, certainly. It is your money. You should get it when you need it. So ensure that the fund is highly liquid. Now, how will you ensure this? If it is highly traded in the market, that means there is a large volume of buying and selling which is happening in the market. When this is happening, your fund will always be readily acceptable whenever you want to sell them. So liquidity is how quickly your assets can be converted into cash. So high traded volumes lead to high liquidity. Ensure that. And last but not the least, I've picked up four important aspects. It's the tracking error. Now, what is tracking error? Gold ETF prices may be marginally different with the actual price of the gold. Why this happens? Because of the expense ratio and certain other fund management charges. So this leads to a marginal difference between the gold ETF prices and the prices of the gold in the market. So this difference is known as the tracking error. So choose the fund which has got the lowest tracking error. Lowest tracking error indicates that the gold ETF prices are nearer to the market prices of gold. Here is a list of gold ETFs available in India in alphabetical order. So you can take a screenshot of this, and based on the parameters that I have told you, how you have to analyze and pick up the best, you can decide which gold ETF you want to go in for it. This video is entirely for educational purpose, so make sure you're investing into the best gold ETF as per the parameters told you in this video. Stay tuned for more. Thank you for now. Do not forget to subscribe to Financial Markets by Dr. Supriya. See you in the next content next week.